All right, we're live. Hello, everybody. This is Lane and Dean here. We are going to do the 44th episode of the Real Estate Braddahs. We're going to be talking about September statistics, correction here, beware of scams, who's buying in Hawaii, and we are also going to be doing it with a little wine, and I think Dean's probably drinking his Miller Lights. Here we go.
In Hawaii, there's so much to do. There's hula, there's surfing, and real estate too. We just two local guys with so much to say. So listen to the Real Estate Braddahs today.
We made it, huh?
We made it. Yep. Oh, I think that might have been the first time in 44 months that we missed the actual date and time that we had planned to go on.
Yeah, there was that one time when I was in Dallas, walking to an airport with my AirPods and my laptop.
But we still did it, didn't we?
We still did it.
We still did it.
Anybody saw that one? But we did it.
Yeah.
So if you guys are new to this, we are very interactive here, and we should probably be more interactive since it's a Friday today. So if you guys have any comments, questions, type it into the question and answer box. And for those of you guys who have been catching up the previous episodes, let us know what you want us to do in the future. We're looking to kind of change things up here potentially. If you guys want to hear more commentary, you guys want it to be more interactive, or you just want us to bum rush through headlines, so let us know what you want. A little bit of an Easter egg here. We're going to be doing a free cram school for syndication investors on October 16th, Saturday, in the morning for Hawaii investors. That is 9 a.m. Pacific time. So if you do the math, 6 a.m. Hawaii Standard Time.
Yep. And if you want to just hear Lane and I agree to disagree on our topics, you can request that too. I know we've had some feedback where some of the listeners were like, well, I've heard comments where we Lane, I know we both have similarities in our investment, I guess, strategies, but we also are very, we stand apart in other issues. So it's kind of cool when we talk story and we kind of go back and forth, right? Because everyone does things differently and everyone has different mindset. So I like talking to you about it because it helps open my mind when I hear you talk. So I appreciate that. So, but anyway, so it's October, Q4 of 2021. I think that's, the last quarter of the year. Hopefully, everyone's looking back on their vision boards. I think we talked about vision boards at the beginning of the year, and now it's time to see status update, see how we are. It's Halloween time, and I just heard Lieutenant Governor say Halloween is on this year. I think Blangiardi just announced outdoor gatherings up to 1,000 maybe, so that's pretty good news. Lane, I know some of your Simple Passive Cash Flow REI Aloha people were asking about the retreat for 2021, hoping, or early this year, hoping it would be on for January, right? So, and I think it's already been postponed, but that kind of thing gives us I guess hope for these gatherings here. But anyway, I did a YouTube video on scary real estate stories. So if you're interested in that, come and check me out at my YouTube channel. You'll hear some spooky, crazy stories if you tune in.
What's your story? What's your story of the year?
I'm gonna blow it though. That's kind of like you're gonna kill my.
Oh, what man! Jeez.
One of them. Okay, I'll just give you one of them. One of them is actually about a fourplex in Kansas City, Missouri. That's it's almost a 100-year-old house, and there's it's a fourplex, and the property manager had just redone 2 of the units, and it a lot of money got put in, and he was about to show it for the first time to potential tenants. And he drove up to the backyard, and out on the lawn, strewn out all over the lawn, was all this clothes, and there was a mess, and there's two people just getting crazy. But anyway, you tune in, go to my YouTube site and watch this real estate scary stories, or ping me and I'll send you the link. But you'll hear two scary stories that are quite frightening. So hopefully you'll enjoy it. But jumping in to September statistics, I mean, it's we sound like a broken record. No records broken this year. Actually, yeah. So no broken records or record highs or anything in terms of single family. 1.05. That's the same actually as prior month. And actually, on the condo side, we have 478,000 was a median price, which didn't go. It went down a little bit. I think 520 was last month, but it's up 7.5% from same time last year. So it's a little bit deceiving, right? And I've heard commentary about that too, where they're saying, we're looking at these statistics that we typically provide are current month or September compared to the same time last month. And the reason that's done is because of the seasonality. Keeping in mind that, that first year of COVID, seasonality kind of went out the door, and everything just kind of went nuts after around March, April, May, around June of 2020. So, but now things are getting a little bit more seasonal. So we're going back to, comparing to the same time last year. So let's talking about homes available for sale. So typically, my second slide that we talked to is months of inventory. But as you'll see in my next few slides, I'm talking about homes available for sale, which is, similar to months of available inventory. But as you can see, when we're looking back to 2011, and we're looking at the trends here. But if you look at the last 2 years, you'll see a big drop, compared to January 2021. So you see it dropping a lot, and you see a few hiccups here and there in the last few months at the tail. But the reason why I wanted to talk about homes available for sale is because I've been hearing a lot of pundits in the mainland and stuff talking about the big correction coming, or it's here already, right? And what they're talking about is they're going to exactly, right? So I don't know if it's like just so that they're the Nostradamus now, and they're making the prediction. This is the top, and now we're going down. And so they're going on the next slide, Lane. What they're referring to, or one of the points of reference that they're using, is this homes available for sale for Fred, and this is on a nationwide level. And you can see housing inventory compared to, it's like March, January 2021, it would kind of bottomed out, and now it's starting to go up. Now we're at like 640,000 available homes in September 2021. So we see it kind of going up. So there is a point to what they're saying. This could be an inflection point, but I feel like the stories that are being said are more, I don't know if it's fear tactics, but they're just saying, oh, we're topped out, the correction is here. But the funny thing is, if you go, it's all relative, right? So, and you can use statistics and trends however you want. But take a look at the next slide, Lane. And so now, we were drawing it out a little bit longer for more perspective. So I only went back 3 years now, and you look at this trend, and you see it go down, down, down. And then, of course, you see it starting to come up again. But then you also see it going down at the tail end. So depends how you want to pitch it, but I feel like, and the whole point of this is homes available for sale is correlated with supply and demand, and that's correlated with the home prices, right? So that's saying, okay, we bottomed out in April, May, and now in terms of inventory. So now what's going to happen? Oh, prices are going to drop because as inventory jumps up, we're going to see a big correction. Another point that these pundits are saying is interest rate trends. Yeah, Lee, thank you. So now they're saying, okay, look, um, October 6th, we were at 3.13, the 30-year Fannie Freddie rate compared to 1 month ago is 2.97. OMG, interest rates are going up, and now that's even more so going to cause a giant correction. But again, everything is relative, right? So if we go back and we take it back a little further and look at these the interest rate trends on the next slide, Lane. Sorry, the one after. Yeah. So taking a look at this, we're still at all-time lows in terms of interest rates. This one's going back to 1971. So I mean, there may be some validity from the standpoint of bottoming out, maybe in terms of inventory, and even bottoming out in terms of interest rates. But I mean, everything needs to be looked in terms of perspective, right? Because the Feds are saying too that they don't plan on raising the Fed rate for until at the earliest, what is it, late 2022. And I mean, of course, that's just a year away, but even if and when they do, it's going to be a slow increase. So I don't know. Lane, what are your thoughts? What do you think of are we at a correction inflection point right now?
I think if you guys want to make a YouTube channel or a podcast, you start to do things that are clickbaity, and one of the ways to talking strategy here is to sell people on fear, right? What is going to get people to click, right? The three things that, or if you watch the news, we kind of do this, stay tuned for the killer on the loose in Makakilo, right? Or Waikiki, it's all the stuff that gets people to click. And I mean, they're just getting people to their YouTube channel and whatever, and it's never right. I mean, nobody's guys like Jim Rickards and all these other guys, they're notorious for predicting 5 or 6 of the last recessions out of the last 2. A clock is always right twice, or a broken clock is always right twice a day, or something like that.
I was about to say that same statement.
I mean, for homeowners, this is very important where the interest rates are, but for investors, you make money off of the spread between the cap rates and the interest rates, and they typically go hand in hand. Right. So it doesn't really matter.
Right. Good point. Yeah, it's a very good point. So point being is for investors, it's always it's always a good time to invest, right? You just got to make sure the financials look proper, right? And you're underwriting.
There's a spread between the cap rate and the interest rate, which there typically always is, except in weird times like the 2008 free fall. But then typically bounce back to the traditional averages, spread in there.
Yeah, good point. So as always, I like to talk about these cyber criminals coming about, because a lot of times these are all interesting because they're always coming up with new ideas. So the latest and greatest cyber criminals, what they're doing now is shortened LinkedIn URLs. So now when someone makes a LinkedIn post that contains a URL, the URL is usually shortened if it's longer than 26 characters. Yeah. So the shortened URL starts with the LNKD.in and it's followed by a random string of characters, right? So what cyber criminals are doing is they're converting a malicious URL to a shortened LinkedIn URL. And once they have that URL, they add a phishing email to the link. And if you click on that link,
one.
Yeah, right. That's why this is a good one. I had 3 that I wanted to talk about, but I deleted the other 2 because those seemed a little lame. But this one seemed applicable, where it's especially us using LinkedIn these days, right? And you got bright people using LinkedIn. So yeah, they add the email, then you click on the email, and then it redirects you to the websites where you have credential stealing web pages. So, as always, don't fall for these tricks. Never click on a link or download an attachment in an email that you were not expecting. And if you think the email could be legit, contact the sender and make sure that was intended for you and it's legit. And it's keep in mind that this isn't just for LinkedIn URLs; they can do it for other platforms. So always think before you click. Yeah.
Pick up the phone. Talk to a person.
Yeah, I know, and I get these calls too. And it's good, and I tell my clients, my friends that call me, like, oh yeah, thanks for calling and checking, because I don't want to be associated with something that they get in trouble with. So one of the big questions that, especially in this hyper sellers market is in Hawaii, is people are asking me, oh, where are people buying from? Because all those articles, they say, oh, people from California are that can work remotely are buying here, and the locals are moving out, yada yada yada. So, and I always thought, yeah, there is truth to it. So now we have the statistics to prove that, right? So Title Guarantee came up with information for us, and this is for the first, actually little dated, for the first half of 2021. But as you can see, for the top U.S. states that are buying, we have in the top 5, we have, of course, Hawaii, which makes up about, I think, 65% of the sales, including all sales. Yeah. Then first it truly is California. Then we have Washington, Colorado, Oregon, New York, Texas, Nevada, Utah, and Arizona. And majority of these are military states. So I believe a lot of these are the military PCSing in and out. Yeah. So,
but just generally, I mean, people are trying to get away from California, Seattle.
That's a good point. Yep.
And I know at least a handful of people that have kind of made that move to Hawaii, so they can live off the map.
Yeah. That's good point too. Yeah. So that point being, it's not all military, but coincidentally or not coincidentally, a lot of these are large military states. Yeah, with large.
Do you think it's military? I don't think it's military.
I think some of it is, and
I believe they can afford the housing out here. I think it's your tech remote worker who makes over $200,000 a year buying houses here. I mean, if not, they can't afford.
No, that is true too. However, with the VA benefits and having no cap on the loan anymore, the VA loan limit, and the preferred rate that the VA borrowers get, there are, and there's great benefits coming from the military, whether you're officer or not, because you have either the COLA or the BAH, which is that the housing allowance that I think it's use it or lose it. But because the cost of living in Hawaii is so high, that allowance is really high too. So a lot of times it can be a big portion of that mortgage payment and help VA buyers a lot. And it's interesting too, because there's actually at one time VA appraisers had a really big stigma, but it's actually kind of going away now, and VA buyers are getting a lot more prevalent. And actually on the appraisal side, VA appraisers there could be actually a benefit or an advantage getting a VA appraiser versus a conventional appraiser in terms of square footage of the house. Because my understanding, and so don't quote me because I'm not a licensed appraiser, is that when there is living square footage that may not be permitted, the VA appraiser could potentially include that and count that in the appraisal, versus conventional. I believe it's a little bit more strict. So this is kind of something that's counterintuitive to what we've heard in the past, but it depends on the appraiser. But my understanding is that a VA appraisal could potentially include that square footage in the calculation for or the valuation of the home. It depends on if there are certain criteria, like the appraiser needs to determine if this would be considered in normal circumstances or not. So yeah, Again, maybe it would be good if we have a VA appraiser around one time and
Well, they won't
ask them.
say, right? I mean, that's why we're here, right? Because appraisal will never say that on any recording device, right? Like, it's kind of, I mean, so the VA appraisals are not like the AMC type.
The AMC, what is
the AMC is kind of like it's kind of the box that it's supposed to be after the whole crash, right? Where you could just go to any rando appraiser and get whatever appraisal you wanted to get. They made this like AMC where it was kind of randomized, yet you can kind of exclude certain people you don't like that gives low appraisals. But
so this is the pool. The pool.
Yeah,
So
the pool.
my understanding is there is a pool specific for VA appraisers, and I think there's approximately 20 something odd appraisers in Hawaii, is my understanding, for that pool, which is a lot, I think, smaller compared to the conventional appraisal pool. So yeah, I wasn't aware of that, where you could kind of isolate some, because I'm sure if that was the case, that would be great.
Well, like they try and, I mean, I think it's a lot better than what it was, right? Because before you just go to like, your brother Dean, who would just get whatever appraisal on the paper that you want, right? But then they won't needed it to make it randomized, because that's not any good way of running a business, especially if you're a bank. So they came up with this kind of randomized program, and I may not be totally correct here, but this is the way it's explained to me. But then, like, the kind of the insider trick was like, all right, because there's always tricksters out there, is that you just exclude Barry, Jillian, who always gives the low conservative appraisals in there. You exclude essentially getting the people you want anyway.
Oh yeah, I think now it's assigned, and it's even less. That option is even harder to do. My understanding, and I just, what I hear is that it's assigned, or there's a pool, and then you get assigned that the appraiser gets assigned this specific loan to do it on. Yeah.
Okay.
Yeah. So, but yeah, so I get this question a lot too from my buyers, who, like, especially ones that are losing out on offers, like who's buying, and so there you have it. It is true. California, Washington, Colorado, but also internationally, the title guarantee also offered us who's buying, the top 10 that are buying internationally. So in first place, we have actually Japan, which is cool. It's kind of interesting. I mean, doesn't sound like new news or anything, but it's kind of makes me wonder, how are they doing that? Because we can't go to Japan. Can they come? Maybe they're buying remotely, or sight unseen. But we also have Canada in number 2, Korea, Singapore 4, 5th is Taiwan, 6 is Hong Kong, 7 United Kingdom, 8 Germany, 9 Switzerland, and 10th place, which is interesting one, is China. I didn't think they'd be that low. Yeah. So I thought that was
interesting. What?
Yeah.
Out of these like top 6 countries, what percentage of that volume is that?
So the top, well, it's still all the international is only 2%. Yeah. So
okay.
Of all is all international purchases are 2% of all purchases in the last the first half of 2021. Yeah.
Okay.
Yeah.
That's a lot lower than what I thought it was. I thought it was a more substantial amount, like 10 or 20%.
No. So that's the top right. You see the circle, the 10.7 billion, and then the 2% is the foreign buyers. Yeah.
All right. Well, that's how we do this, so we can learn stuff and not just make it up, right?
Fun.
Told us. All right. So also from Japan, I know you get a kick out of these, but the Japanese ice cream manufacturer made a 60-second commercial apologizing that his price of his popsicle, that sounds bad, but he's an ice cream manufacturer, went up from 60 yen to 70 yen for the first time in 25 years.
25 years. Oh my goodness.
So inflation is here. But inflation is good if you're a homeowner or an investor landlord, right? I mean, you're buying hard assets that go up with the price of inflation. So if you're freaked out with inflation, buy stuff that goes up, like real estate, hard assets.
I sure hope his employees got raises in the last 25 years.
And you probably had to, right? I
I
mean,
don't know. I mean, that's hard to believe. We're anyway.
what's something here in Hawaii that keeps the same price? I know Zippy's is ridiculously
Oh
priced.
yeah, that's. I can't think of anything that has stayed the same
Stayed.
price. Yeah.
Yeah. The acai bowl is like $20.
More than a plate lunch, right?
I know. I know. Anyway, you can think of that. Think of something that hasn't gone up in price.
Okay.
Anyway, but like this is the a chart of the commercial cap rates essentially going down, but it's all the spread between your cap rates and interest rates is all that really matters as an investor, and this is why it's always a good time to be buying. From a national perspective, rents are skyrocketing as of the beginning of this year, January 21. Dean, you manage some Hawaii stuff. What are you doing with rents? You pushing that stuff?
Yeah. Actually, I don't self-manage anymore, but I think for the most part, all of my rent. Well, actually,
Hawaii rentals. Like, what do you think?
Yeah. Well, during COVID, we have been keeping them the same. We haven't bumped up anything during COVID.
Yeah. But start of this year, that's when stuff started to heat up nationally. Like, you guys.
Yeah. So I mean, I don't have anything that's expiring soon. So but I'm actually I think well, I think I think my one in you want to talk about Vegas? My Vegas property, that one renewed. I think mid-year, so maybe around May June this year. And so what I did was I kind of wanted to sell it, so I just said, you know what, just let's bump up the rents and see what they say, and if they stay, that's fine. So I think I bumped it up 150, and they signed it immediately, and I was like, oh, okay, I guess I'm not gonna sell this place then. So yeah, so at Vegas at least we bumped it up. Again, that was June of this year, I think.
Yeah.
So
But cheers to that.
Yeah, seriously, cheers.
Yeah, about time it's paying off, this whole landlording thing. Some other markets like Phoenix are on a tear. Phoenix, Tampa. Here we go, Las Vegas. But did you know, Dean, that the national average in July to July was 16%? So that $150, what is 150? What is your rent?
Oh, what was my rent? My rent, I think, was 900.
Yeah. So there you go, man. You're doing good. That's 16.6%. You increased the rent. And look at
I'm on par.
Las Vegas, 16%. So you're a little bit better than average. So don't feel that bad. You're right on par here.
There you go.
You know. So that's what's good about real estate, right? And the mortgage stays the same. The expenses kind of keep up.
Yeah. The I mean, it's an association. It's a condo unit. So fortunately, the association fees haven't been going up so much. Although as soon as I renewed, the tenant all of a sudden complained about the carpets.
Yeah.
So I was like, they wanted the carpets replaced. I had to. I haven't fought it yet, but I told them, well, let's take pictures and let's try to get it cleaned. But yeah, I think I'll have to replace those.
Yeah.
But note, it's funny how always after they renew, then they start putting in these requests, right?
Yeah. Yeah. So, and then you just say, oh, don't worry, we'll talk about it next renewal period.
and then part of me is wondering, like, how did it get this messy? And it always.
Oh shoot! We better have the last person who messed this up pay for it. Oh, that's you.
Yeah.
I know what you're doing. You're just doing the old take some pictures. Maybe they'll forget about it. I don't know. I don't have the patience for that. Just let the property man. Well, you have a property manager.
Yeah,
It's
yeah,
not
yeah,
you.
yeah.
Yeah. Here's another source. So this one puts your Las Vegas at 20%.
Oh,
So RealPage is saying that you're below average. So you should have pushed it to 160 rent increase.
oh, my bad, my bad.
Yeah.
Like I said, the intent was actually that they would move, and then I was gonna sell it and be done with it. But I thought I
Yeah.
put it high enough, but I guess I didn't.
And you would have done like 250, right? But if you do stuff like that, sometimes these guys will jack up your property because they're pissed, right?
Yeah, I don't want to. Yeah, exactly. I mean, I'm trying to be not
Reasonable.
totally unreasonable. Yeah. But I figured if I sit at that, that's a big rate. That's a big bump up.
You should have came to me and let's look at the data. Everybody's bumping it up 20% in Las Vegas.
Right. And that's where we the point too you bring about is like how we agree to disagree, right? I'm more of that conservative and like you said, I don't want to get too crazy where then they pour concrete down my drain or something, and so I don't want 20 dead cats in my house. You know what I'm saying, Lane?
I had that happen.
I know.
I can raise the rents though, but I didn't do anything. I didn't feel like it deserved that, but
yeah.
Yeah, rents go up over time. Any other markets here you're interested in? Are you looking for Missouri? You're in there too.
Are they there? Missouri or Kansas? Oh, KC right there. That's good.
Kansas City, Missouri ain't that great. I mean, it's cold up there. It's kind of so.
Hey, we have a comment from Nuu. He said, "Thanks for the webinar." Says, if we have a few deals that we're looking at, can we submit for you guys to look at? I'm cool with that. I don't know if he wants us to do it live or he just wants us to
Yeah, put it up. Get it up, man. You got us for another maybe 10 minutes.
Yeah. That would be fun. That would be fun to do a quick back of the envelope check. And I know you're more versed in the other states too. I mean, I've played in only 8 states total, and I haven't kept up with a lot of them. But yeah, that new submit it if you want us to try to take a look at it and see what we think. Do a quick analysis. That'd be fun.
Yeah.
Maybe that would be something that would be people would want to hear about.
Yeah, I mean let's do what you guys want.
Yeah.
So big REIT here, DOP is acquiring 2,000 units in the Sunbelt states. And we kind of talk about this a lot, right? From Arizona, Texas, the Carolinas, Georgia, that nice smiley face, warmer climates, better economic growth down there. And generally population is moving away from the northern side down to the south. I put this one in here because I know you're interested in Las Vegas, as am I. Yeah.
Maybe that's where the Aria Aloha, the retreat should be next year, no?
I think at one point, whenever we can get over this stuff, we will have many retreats in Las Vegas.
Yeah.
Because I too am an investor, investing in a deal there just for the tax reasons. I'm not a huge fan of the market, but I am just doing it for the tax benefits. But this is just a good example of Blackstone, who's a big hedge fund. They're just value adding not apartments, but short-term rentals, hotels, and they can do that because they're well capitalized and they have the professionals with the expertise to do this type of stuff. So they're unloading the Cosmo because they've already value add that hotel. And I think the reason I put this in here is very indicative of what I'm seeing from a lot of sellers and maybe from small landlords too, is that you're seeing a lot of these guys they were ready to sell, but the pandemic happened and then they're like, oh shoot, this sucks. So as soon as the pandemic kind of let up earlier this year, they looked to sell. And although some of the deals are like if you just wait 3 months, you're going to get so much more price because a lot of the concessions are burning off, loss of lease are burning off, but they're just already made that mental shift in their head. Hey, I'm just going to, in a way like in Blackstone here, let's just unload Cosmo and get the hell out, and then reallocate funds to like now they're buying the Condor hospitality hotels here, 15 hotels across the nation, and they're just churning their money.
And that's kind of exciting too from the standpoint, because to your point, then that kind of leaves meat on the bone for the next guy, right?
I don't know. I mean, if you can eat it's wherever you're going to make the biggest turn for your dollars, right?
Right. Which like, to your point, Blackstone can do, but the next buyer, they're getting some potential value add potential if, like you said, that if Blackstone's not holding it till the end where they get the loss to lease, but that will provide value to the next buyer, right? Like it's like when you some people do renovations and they're not gonna spend all the money to do all the renovations. They leave a few things here and there so that the next buyer will have some sweat equity that they can put in it to add value to the property, right?
Right. So, or you're just waiting around for some sucker, and that sucker could come around at any point. It's just more highly likely to come at the end of the business plan.
Mm-mm. Or maybe not a sucker per se, but someone who doesn't need as much of a yield as others do, right?
There's always somebody smarter than you, and there's always somebody dumber than you. There's always somebody who's a more lazy investor than you, and at the same time, or better investor than you. There's always one that's worse, right? Like Turnkey Rentals, you and I have been there, done that. And I tell my guys, just unload to this next new bunch of guys looking to buy out-of-state properties, right? It's just a constant revolving thing. Yeah, you're probably listening right now. You may not want to do that, but look, that's the only thing you have access to at this point. Maybe out-of-state remote rentals.
And you do learn a lot, right? I mean, to your point, Lane, there's a lot of education in that process, I think, right? Yeah.
No, get it in, man. Like let's hook it up. Give us some numbers. Type it in. So what do you do, Dean, when you make a boatload of money selling this vaccine that everybody needs? Well, Moderna buying a new nice headquarters in Cambridge.
Wow.
It's a little bit. Talked about the Easter egg here. Moving on. Okay. So SB9, have you heard about this thing in California? Basically, it only impacts California, but basically what it is you would have all these I'll just say it, more rich areas that are all single family home, right?
Okay.
Perhaps in Hawaii, where is this? Hawaii Kai. I don't know. Hawaii Kai is the only one I can think of right now. But maybe it's not as prevalent in Hawaii, but in the mainland, they are very smart on how they do zoning, and typically single family home or these kind of your Banana Republic type of locations, they'll block multifamily moving in because for those people, they see it as lower income people coming in.
Not in my backyard. Yeah. Smart.
Yeah, not in my backyard. And Senate Bill number 9 in California. California's been hurting for low income for the longest time. And this is just one way to help release the pressure a little bit. So now they're going to kind of, open it up to, throw in some duplexes here, there, some triplexes or quads. And if you're a YouTuber, you need to make some videos on this and tell everybody that the California real estate market is going down now. But if you're an investor,
get out of California, right? Wasn't that the hot one 6 months ago?
6 months ago, right? So, but if you're a investor, I think it's inevitable.
Yeah.
This is another one. This is why I keep telling you, Dean, man, stop doing these retirement accounts. Because, let me explain to people what this is. So there's a current bill that's going through, and a lot of this is set forth by Mr. Peter Thiel, who messed it up for everybody. What he did was he invested a lot of into the B shares, more your general partnership side shares that aren't really worth anything through his IRA, his Roth. And then of course there's asymmetric gains on that. So he's gonna get, I don't know, like $1 of shares goes to $500 worth in his Roth IRA, and the government's like, WTF, man, like, dude, like now
They
now
get
they
no
rank all
income on
these
that.
bills that like, all right, now we can't have all these like 10 million mofos making these huge IRAs, and then so they, in my opinion, what they should do is they should just cap the maximum amount of these types of accounts. But they're doing that, but they're also proposing all these nasty things that hurts guys like you, Dean. So you can't invest in private placements or maybe even real estate. And this is what I talked to a guy recently in Canada. They don't allow their citizens to invest in anything other than the nonsense marketable securities.
But I think the purpose of didn't they create the IRA in the first place to promote employees to save outside of their company plans, right?
Right,
That was
because
the
the
idea.
pensions suck and they
Right,
didn't work
exactly.
anymore.
Or they were going away, right?
Right.
Some pensions are going, and then now you have like defined, no longer defined benefit plan. You have defined contribution plan, meaning it's not what it's promised to you based on your salary. It's what you put in, which is, it makes sense financially or fiscally for the employer. But now the problem is the government is like, okay, well, for these like the Roths and stuff, they're not getting any income on the back end, right?
Yeah.
So there's no income revenue for tax revenue for them. So I think that's the whole push. And coincidentally, I just had a talk with a friend about this. Actually, Lena, REI Aloha member, yesterday about this exact same tax bill, and they're stressing out because they're trying to they're trying to tax plan, but who knows when this is going to go through. And what this also affects is people who do the backdoor Roth, so when you're because the Roth IRAs are capped, right, by a certain limit. But
yeah, explain what the backdoor Roth is for people get
so
bad ideas in
basically,
their head.
so Roth IRAs, for you to do a Roth, you're capped. I don't know what the relatively low. I think it's like 100. Is it like 150K? You cap, and you're not allowed to do a Roth IRA. So, but what you could do prior to this, and I think you still can, is you do a traditional IRA. So that's a deferred IRA, and so you're not paying up front, and you pay the taxes on the back end on the gains and the principal. But what you do is, after you create your traditional IRA, it's called backdoor because in the following subsequent years you convert it to a Roth IRA. So it's kind of like, I don't know if it was like a loophole or whatnot, but that was one way you could get it to be a backdoor to become a Roth IRA, so that you would then have to, you pay the income taxes on the front end, and then you don't have to pay anything on the gains afterwards. Yeah. So I think that's what, right? If I'm not mistaken, that this takes that away, right?
Amongst many things.
Yeah,
And
right.
you're also not allowed to invest in real estate or private placements. I mean, like I said, I mean, I told all my guys, like, don't worry about it yet, unless it's written into stone.
Well, I think the other question too, that the other listener was talking about too, was, does this affect the solo 401ks or the what was that, the EQRPs, if you will?
Yeah, so like what I've been hearing is it not quite yet.
Okay.
It's what the people that I hear from that actually read the stuff, that are low tax lawyers, they're saying it's not really, doesn't really apply. They're seeing ways that you can make it so it doesn't. So if anything, don't do the self-directed IRAs or the self-directed Roth IRAs. Do the solo 401ks.
Right. Okay.
But,
Which I'm doing also.
Yeah.
Oh yeah. Okay.
Yeah. So you're good. Good, man.
Well, no, I still have some things in the self-directed IRA that I put that I tried to put real estate into. So, but no leverage or no syndication. So hopefully no UBTI or UBIT for those. But like you said, Lane, I mean, these are all pending bills, right? So until they become tax law, you never know. So that's why a lot of CPAs don't want to even comment or opine on these until after they become law, because as these bills go through each side, they're getting changed, right? In order to try to get them passed, they make concessions with the other side, and they get tweaked. And so if you are to opine at it at one point in time and they come back and it, that may not become that pretty sure that won't become law, when it does get finally passed in its final form. So I think that's why a lot of CPAs don't like to even discuss these until they or analyze them until they become law. Yeah,
Well, most CPAs aren't even aware of any of this stuff is happening.
that's true, especially when it comes to these IRA. The pension is very specialized. Yeah, these retirement fund things, even on the audit side, is very specialized. So yeah, the laws that they've created are so robust, and it's crazy. Yeah, so even corporations have huge or departments that are so specialized that's handling the retirement plans and all that. It's pretty crazy.
Yeah. Here's another part of this proposed bill, and who knows if ever is come to fruition. We're just a couple of guys here just talking about this stuff. Is banning ownership of your of anything more than 10% in anything. So no more like javing with your buddy, and none of that type of stuff. What that does to the Peter Thiels of the world, God knows how it solves that problem. But it's like the infrastructure bill. They call it the infrastructure to push it through, but there's most of this junk in there. It's just nothing really to do with infrastructure, and a lot of times they'll hide. And you look at the last 3-4 bills, they just use that to hide things they screwed up with the last bill. So anyway, yeah, I mean, it's important that people know this stuff so they can kind of see the inconsistencies in this type of stuff. All right. But anyway, here's the meme, right? Don't do it. You got, I don't know what wrestler that is, but he's kind of having a good time there. He's thinking he's smart with his tax deferred IRA 401k, but little does he know that the government wants you to put your money in these tax deferred accounts so he can tax you or Dean at whatever the heck rate they want in the future. Right? Like, what are you gonna do, Dean, if they just decide, let's just jack rates up to 45, 65%?
Yeah, that's true.
Take the money out.
Right. To your point too, always the assumption is we'll be in a higher tax bracket when we retire than we are now. Yeah.
I'm optimistic of you, my friend. I think you're going to be doing well with yourself, especially when you jack the rents up on your guy for $150 a month.
Right. But that's to your point too. You need to take that into consideration when you're tax planning from now versus 30 years from now, right?
Yeah, and it's our form, right? We don't know, but I mean, you can make educated risks.
Yeah.
And stances.
We have a comment from Mr. Perry. He says, he sounds like a conspiracy theorist. He says, I'm more concerned about the IRS peeking into our bank accounts.
Oh, dude, they already know that, man.
Old news.
Know that. Yeah, old news, man. They already know.
No, you're going to make him more paranoid, Mr. Perry. Mark, no, don't listen to Lane. Don't listen to Lane.
Yeah. What is your social security number? If you forget, don't worry. We can pay somebody $1 on PayPal to go on the dark internet.
The dark web.
Yeah, the dark web.
The dark web.
Yeah, it's all out there already.
Yeah. You just gotta piece it together, right?
Yeah.
And it's it's unreal. I didn't realize until, I don't know, a year ago about the dark web. And my 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 tax CPA was doing, taking, I guess, continuing education, and I guess learning about the dark web, and all the information that's out there, that you can buy, and people can then piece it together. And um, it's scary from the standpoint of what's out there. And then it also, education is great, but it also makes you a little bit paranoid, but in a good way, right? It's like we need to be a lot more um, aware of this, especially sharing our information out there on the internet, whether it be emailing friends or someone, like a picture of their ID or something. Got to make sure things are secure. And even at that, what is secure, right? So
Nothing secure.
actually,
I mean, do you see the
yeah.
Netflix thing on is it Edward Snowden? Like
No.
if people, yeah, go watch that. I
Okay.
mean, it was pretty good. Um, it's funny. He was giving props to that one Facebook whistleblower on Twitter on Monday. That was Monday, right? When everything shut down on
Yeah,
Facebook,
yeah, yeah,
Instagram.
yeah. Uh-huh.
Yeah, I mean, it's all out there. I mean, to me, like, you just have to assume that it's all out there. But like, I think you just have to play goalie and like, and just assume that it's gonna happen. But like, when it does happen, if you catch it right away, I mean, that's how I look at it.
Yeah.
It's like soccer. Your forwards and your halfbacks, they're gonna let the ball through, but that's why you gotta play goalie at the end of it.
Right. The sweeper, yeah. Or I'm sorry, goalie. The goalie is the last stop
Even
after the sweeper.
yeah, after the sweeper, right?
Yeah, after this. Yeah.
So this guy, he's talking about middle market, lower middle class. It's kind of where it's at. I think both of you and I agree on that. Here's something here. So the orange line is the median income going up in the last decade, but that's to me as inflation. For it to go from that to that, 45 to 65%. I mean, you can figure out the pace of inflation there, but I'm sure the 65 grand doesn't buy nearly as much.
And I think that excludes Hawaii.
Yeah. The blue one here is the median rent divided by the income. So like right now we're kind of sitting at, on average across America, 22% of people's income goes to their rent or their housing. Normally when you screen tenants, you look for at least a third.
A third, yeah. I like that green line. I want those tenants, right?
Yeah.
Yeah.
Well, they're not your Class C tenants. What is it like? What do you call it? Is more B like B minus, that one? $900 in Vegas or $950 in Vegas, right?
Yeah, actually, it's yeah, I think so. Yeah, but that's sort of about B minus.
B minus, yeah.
Yeah.
B minus, C plus.
Yeah, but you know what? The funny thing too is in Hawaii, I think that green line, if what people pay for rent compared to their income is a lot higher. Even that 33%, a lot of times it's harder to even get that. So I mean, that's a challenge.
Yeah.
It's because of
okay, so I'm gonna be careful how I say this because this deal, no one was really allowed to see this deal, not to talk about it. But I'm talking about so vaguely, no one ever understand, be able to tie it to. But there's a deal out there in Hawaii. It's a large apartment complex. It's Class C for sure. But like I'm looking at the deck, and like it's like average median income, and the pictures look gorgeous. Like if you're from like the mainland and you didn't know anything about Hawaii, you'd be like, wow, this is a great opportunity. Like look at the pool. There's like uplighting on the buildings. But like the statistics, like medium household area in income in the area, it's like, dude, like what are they counting? Like 2.5 household or families in one house contributing to that household income. Like it's not the case. Like the statistics are so skewed, weird in Hawaii. You know what I mean? Because the multiple housing and multiple families in the houses.
That's true. Yeah. That's a good point.
I'll tell you later where it was at.
I'm dying to hear.
But any people are always kind of wondering, oh, what's class A, B, C, D? Here's a okay chart, kind of depicting first like how much a medium income percentage these guys are paying, and the medium rent to income in the orange here. If we're ever kind of curious on that. Oh, I didn't know how you had control of this thing too.
Today I do.
Okay. But here's just a summary of kind of what's happening in the market. Strength of demand is far outstripping supply. Build to rent. I don't think we have any build to rent in Hawaii, do we?
Is that in terms of build to rent? What is that, build to rent?
So like on the mainland, like America is becoming more of a renter nation, more and more so every day.
Okay.
So a lot of like these big institutions are buying up rental properties, like how they did in 2010.
Oh, just apartment complexes to We know there are
single family homes. They're building like lower level single family homes for people to
single
rent.
family. Oh, yeah. I haven't heard of. I'm not aware of those. Oh, interesting.
Yeah, I mean it goes along with the trend that people want to generally have more living spaces. They're willing to spend more money, more than that third of their income to housing. Especially going through a pandemic where you're cooped up in the house for 18 months.
I wonder if the financials wouldn't work on one of those though, yeah? Would it not make that make
still
sense?
Doesn't work, but yields are so low now, right? It's all relative.
Yeah. Is this subsidized stuff from the government? Is that how it works?
So yeah, so there's a lot of like programs for like lower income. We own a couple of apartments like this where like the people who build them took tax credits, and if they took said tax credits, what the government says is like, all right, now you're going to rent. You're going to keep 10 to 20% of these units slightly below market, like 10, 20% below market price. So like if you can rent it for like 1,700, you got to keep it at 1,450.
Mm.
And so that's kind of like
okay. Well, I mean, so for majority of the developments, especially like like out in Kakako, like the deals, I think they're pretty much standard these days. Where when these developers are trying to build a community, you have to bake in X percentage have to be affordable living, whether it be condos in Kakako or even like in Core Ridge in Pro City. They have single family, they have duplexes, and then they have these condo units that are affordable living where you need to qualify based on income. So I think these days it's all based. I think it's standard in Hawaii now where the developers need to have X percent to be affordable homes.
I think the way it works is like the stuff that I was talking about was like federal, right? If you want federal tax credits, especially to help your build. But then what you're talking about is more like, all right, when you can still take advantage of that stuff, but as a builder in Hawaii, but you might also have to, you got to play ball with the local municipality, right? And you won't get your permits unless you play nice with the state of or city of Honolulu. And
exactly. Yeah. And then that question always comes up to, not like you said, in terms of permitting is always coming up because a lot of my buyers are like, oh man, the prices are so high. Can you find me land? And then we get into the discussion of permitting and the obstacles of that. So yeah, when we talk about permitting, and again, this is at a way smaller level than I'm kind of getting, I digress, but anyway, let's move on.
Yeah. So I think that is it for this month. If you guys like mainland investing, check out my podcast, The Full Passive Cash Flow. But anything else you want to talk about, Dean? Anything you're working on? You want to get out there?
No, big. Like we said, this is the fourth quarter now. So, whether it be financial goals or life goals on the annual level, now is a good time to take a look at where you're at for that last push for year end, or to start ramping up for ideas for, if you haven't done so, maybe start thinking of how you're gonna prepare for the new year.
Yeah. I got this last slide up here. I don't know if you can you read it? If not,
It's small. It's pretty small.
okay. Well, it's basically saying like jobs that are getting more predominant, like healthcare, nurses, a lot of medical stuff, researchers, epidemiologists, physical therapist assistants, and on the bottom you have jobs that are going away. Tellers, florists, parking of officers, executive assistants, secretaries, legal secretaries, admin people, door-to-door salesmen. What is one thing that you would tell your kids to not pursue as a job that one day you were, and what is one thing that you would tell them to do? I'll go first since I
Okay.
sprung the question on you.
Okay.
Something I would tell them not to do is something that is obviously like lower on the skill labor force, because that's what this essentially what this graph is showing us, right? The baseline level of workers aren't going away. The demand is going less, and therefore it's not going away. It's just they're just going to get paid less for that. So I would say, I mean, you got to at least go to college and get like more of like a mid to higher level skill work level. I don't know. Have you thought of something? I haven't thought of something myself. I mean,
of what not to go into,
or something to go into. Like
uh,
I think computer programmers get paid a lot of money today, where that stuff you would think at some point someone's gonna figure out this artificial intelligence thing.
well, it's interesting. My kids are in 4th and 3rd grade, and one thing that they have today, they had someone like a research teacher talk about coding. So I thought that was kind of interesting. And that's nothing new, but starting at 4th and 5th grade to talk about coding, I thought was kind of interesting. I don't know, that whole discussion about college is a whole nother topic too, because we talk about our investments and our return on investment, right? And I know we've talked it in multiple episodes before too, where it's like, okay, you're gonna have your child, go away to a high profile school, and by the time our kids are going, it's probably going to be 100,000 plus a year, right?
Especially if these guys keep raising the rent 150 every year.
Right. So right, and if they come back, say they want to come back to Hawaii, and then they take a job that's paying, by then I don't know, maybe it'll be $80,000, right? I don't know, but I mean, what's your ROI, right? And I don't want to throw out any specific careers or anything, but that's a good one. EE, right? I mean,
Yeah, I think you can take that any job.
Agreed.
A lot of jobs. Yeah.
Agreed. Yeah, I mean, yeah, I agree. Engineering is also, and you're an engineer, right? Or by education, right?
By education,
So
yeah.
I feel like engineers always. I was in the EE program at my college too for 2 years until I left. But I always felt that engineers, whatever company I go to, they're it's you guys are trained like that way of thinking, and I think that's what you can take with you. Yeah, that methodology. Well, I'm having a tongue twister.
You think well.
Think well, and the
Think on your
proper
feet.
in the proper order too. So, I think that can be applied to so many different things, right? So even I was at the local utility at Hawaiian Electric Company for 12 years, and the engineers, working with them, you get to see them move up in the company in various management roles. So you can tell that management looked highly upon the engineers there too. Yeah. So yeah, good input, Mark. Appreciate that one. That's a good one.
Yeah. Or if they could just buy a bunch of rentals and bump it up every few years, $150. They'll be okay too, right?
Yeah, and then you can live in one, right?
Yeah, you can live in one, but
pick whichever one goes vacant, then you just move across the states to where you want to live.
Yeah. People like to do it the hard way. They like to climb ladders. go to careers. But anyway. All right. Well, thanks everybody. Again, if you guys have any feedback, let us know. But we will see you next time. Bye.
See ya.